My name is Mike Kipngeno. I'm the Cooperative Finance Officer with CLEAR program being implemented by global communities in Kenya. Let's look at bookkeeping and record keeping. Well-organized records and bookkeeping are critical for the financial health of a cooperative. In this session, we will discuss key elements of record keeping. To start off, what are records? Records refer to the information created, received, and maintained as evidence by the cooperative in pursuance of legal obligation or the transactions of the business. For instance, a receipt book is a record of cash coming in to a cooperative business. Why do we need to keep records? First, to help find and solve problems in our cooperative, to control owners' capital, especially cash, to show the direction of the cooperative, to plan for the future. Records allows those charged with management to oversee expenditures, costs, and profits. Records help to analyze cooperative business development over time. Every cooperative carrying out business operation is expected to keep and maintain proper books and records to show how, when, and how much money it has received and how money was spent. There are many primary documents which are used to show money transactions, which will be explained later. Bookkeeping is the process of recording, analyzing, and interpreting the productive activities and financial transactions of the business. Bookkeeping not only allows the business to track the amount of money entering or leaving their businesses, but also improve management and control of operation through a clearer understanding of labor, equipment, supplies, and stock. Organized record keeping of receipts and invoices, purchase orders, and production charts, among other source documents, will help to avoid cash flow problems and ensure that there is proper utilization of cooperative funds. In the normal course of business, the document is produced each time a transaction occurs. For payments, deposit slips are produced when deposits are made to a bank account. Checks are written to pay money out of the account. The official receipt is used by the cooperative to acknowledge all money received to the cooperative, either in cash, M-Pesa, check, or banking slip. The receipts are contained in a booklet and each is in 3 copies, the original and 2 duplicates. The original is issued to the person paying the money. The duplicate remain in the society for record and bookkeeping. This is an important accounting document and should be kept securely by an authorized person. The payment voucher is a document that is used to show money moving out of the cooperative in form of payments. The voucher should indicate the name of the person being paid, the purpose of the payment, and the date of the payment. Cash payments should be signed for, M-Pesa transaction codes written, and check payments should have the check number on the payment vouchers. All expenditure payments should have relevant supporting documents like receipts and should be authorized by relevant officials. Payment vouchers are validated by official signatures only, and the original should remain at the society for accounting purposes. The cash journal is a book that shows a summary of all cash transactions from the official receipt and payment vouchers. The 2 documents are the source of information for the cash journal. The cash journal has 2 columns for cash and bank transactions. Cash entries are made and balanced monthly. This offers information to update to individual account ledgers. In return, these ledgers help to prepare the trial balances. The trial balance is a summary of ledgers and shows actual society performance. To sum up, let's look at the best practices in cash and bank management. All bank accounts should be in the name of the cooperative. There should be proper control of the use of checks. Checks or funds transfer should be signed jointly by at least 2 signatories. One of the check signatories should be someone other than the person who has authorized the payment. Others sign blank checks. This is a very bad practice. Details of each check payment should be recorded on the check counterfoil. Bank reconciliation should be prepared regularly. For example, at the end of each month.